Hi, and welcome to CPAaccountantsIrvine.com. Let's talk about preparing for 2013. The IRS has recently talked about significant changes that are headed your way during the 2013 tax season. As a consumer, retiree, and parent, you could see major changes in your tax return in the next several years. You may not see them in the next years of 2012 filing, but be certain that the impact on your 2013 tax returns can be significant. Most Americans will see changes within their take-home pay, but also changes will be prevalent in the areas of retirement, accountants, student loans, and child tax. These taxes might provide most changes in the middle-class households. Although there is still time for changes, being ready and prepared to make accommodations to the tax return filed in 2013 may be important. Understand your tax changes will help prepare you for a reduced return, or even possibly owing on the 2013 taxes. Understanding what these tax changes are and how they may affect you will help you to plan and budget accordingly over the next year. Here are some new tax laws and regulations for 2013. If you are currently an hourly employee and your company deducts FICA and insurance plan expenses from your earnings, you will likely see a change in the amount you are withholding. The withholding for FICA is currently 4.2%, or the first $110,100 obtained per taxpayer for 2012. This figure is planned to increase to 6.2% for 2013, a full 2% increase that can have major financial changes for Americans. The earning amount is also set to increase to $112,500 earned per taxpayer. The insurance plan policy maintaining quality is currently at 1.45%, and this will enhance to 2.35% for 2013. There is not an earnings limit in place for insurance plan policy taxes, which means that the rate can continue to rise for taxpayers in future years. The result is that if you produce approximately $112,500 per interval, you can predict that the U.S. government to take an extra $3,403 in FICA and insurance plan policy taxes from you in 2013. This converts almost to $300 per month. It should also be closely noted that individuals that are self-employed are not exempt from this new tax regulation, and they can expect to see the same tax increases. This is because these changes will also result to changes to the self-employment tax that our individuals, organizations, and self-employed individuals are responsible for. In addition, for 2013, there are also a wide variety of key changes regarding tax discount rates and exclusions that will affect a lot of U.S. individuals. More changes are on the horizon. Another area that we will see impact changes are in the area of itemized deductions. In 2013, the $3,800 individual omissions for higher earnings individuals will start to phase out. It will become more complex to be qualified for health care and oral cost and insurance deductible in 2013. Currently, individuals are allowed to deduct qualified health care and oral expenses that exceed 7.5% of their customized earnings. Those under age 65 will only be allowed to deduct health care and oral expenses that exceed 10% their customized earnings. This might bring challenges for those who have previously applied the 7.5% and are under 65. Again, careful planning and understanding of the system will allow you to understand where your expenses should be placed in order to take advantage of these changes. So, what to consider now? Since we are well informed of what is expected to take place in 2013 regarding taxes, increases, and changes, there are some things that we can do to prepare so the impact is not so great. A small amount of time spent searching for deductions that can maximize in preparations for the coming years might make all the difference in your 2013 tax changes. In general, you have the opportunity to make payments to several vehicles and possibly reducing the amount of tax owed. To take advantage of this, consider payments to the following: charitable contributions, health saving account contributions, HSA, educator expenses, student loan payments, moving expenses, IRA contributions, either traditional IRA or 401k, expenses paid towards moving for new employment, alimony payment. These are just a few of the ways that you can plan to contribute to next year's taxes. If you can afford to make these types of payments, it will save you money in the long run. Make sure to follow the specific tax guidelines that are outlined for material donations if this is one way that you plan to contribute. If you are earning an education, you may also deduct tuition and some fees from your taxes. One thing to consider is how this will play out in comparison to education tax credit, and if it is more monetarily sound for you to use the credit instead. Some deductible expenses are only available if you itemize deductions rather than take the standard deduction. These include medical expenses. You can only deduct the portion of expenses that are above 7.5% of your adjusted gross income. Miscellaneous deductions, for example, job hunting expenses, tax preparation fees, unreimbursed job expenses, and professional dues, but they need to be total more than 2% of your adjusted gross income. Mortgage interest and real estate tax, and also business expenses, which are especially helpful for the self-employed. For more information and to schedule a free consultation, please visit us at cpa-accountant-irvine.com.